Very good evening, everyone. I would like to thank Ahmad and Salman Aishan for joining us this Saturday evening for the Saudi Arabia webinar. And I would like to now give the floor to Salman.
Thank you so much, Eva. Thank you so much for your support to arrange all these things. And thank you so much, Ahmed, being with us. I think we can wait for 2-3 minutes so that more participants can join, and then after that we will start. We'll wait for the participant to join in.
Just to remind everyone that the IFA question inbox would be managed by Salman himself, and also the recording and the slides would be shared within 24 to 48 hours after the webinar has ended. Please note that in UK, it's bank holiday on Monday, therefore the office is not working, and it might take a bit longer due to the fact that the Queen has passed. But we would be able to send the recording and the slides after Tuesday.
Thank you. Okay, I think we should start now. We have several number of participants available with us. Thank you so much, everyone, for joining. Hopefully, you can hear me very well. And we have a mix of members and non-members. So just a quick introduction of IFA and IPA I'll give so that the non-members can also learn about IFA and IPA. Basically, IFA, Institute of Financial Accountants of UK, and Institute of Public Accountants of Australia are a group member bodies and full IFAC member bodies. We are focused on small and medium enterprises. We have more than 45,000 members and students over the globe, and we are committed to align and deliver, as well as to gain our recognition internationally, and specifically, I can say, for small and medium enterprises. We are aiming to have our sufficient number of members in all these small and medium enterprises. As IFA is always committed to provide you the continuing professional developments. So in that regard, in the past as well as now, we are arranging different webinars, and now today our focus is on basically property, plant and equipment, which we refer normally International Accounting Standards is 16, IAS 16. We have an excellent speaker with us, Mr. Vikas. Vikas is a fellow member of the institute. He is currently working with PKF Saudi Arabia, and in the leading role as a supervisor and assistant manager position. He is also he's also pursuing and having the affiliation with the Institute of Chartered Accountants of Pakistan, and having almost 10 years of experience in accounting and finance, definitely IFRS and financial modeling and assurance services. The area of his expertise with regards to industries in leasing, manufacturing industries, as well as in insurance. And previously he also worked with one of the big four, Deloitte, as well as the RSM across the Middle East. So thank you so much, Vikas, being with us. So I am referring over to you. Meanwhile, I'm going to share my screen for the slides of the today.
Okay. Thank you, Salman. Hi everybody. Thank you for being here today for the session IAS 16. I'm Vikas Ahmed. You have a little bit introduction of me, so we'll start now. Current session on IAS 16.
So a screen is visible to everyone, is it?
Hello?
I believe so. Yeah. I think screen is visible to everyone.
Yeah. So we can start now.
Yeah.
First of all, I will give you a little bit, and I will give you a small introduction of IAS 16. Normally, what we will cover in IAS 16. It normally address the IAS requirement for property, plant, and equipment, and their initial recognition and measurement, and then we'll cover the subsequent measurement and include a subsequent measurement after the initial recognition, including the cost and revaluation model. Then we will cover depreciations, and then we will have a little bit idea of decommissioning liability, and then derecognitions and presentations and disclosures. Okay. In the introductions, normally we'll explain what is included in the property, plant, and equipment. Property, plant, and equipment are the tangible assets which are held in the production, in the use of productions and supply. And normally company use these things in their own supplies and goods, supply of goods and their productions and administration purpose. And other major criteria for the property, plant is they are expected to be used for more than one year. If their life is for more than 1 year and they are not being used in the normal supply of the goods and services are in the productions, then they will not be considered as property, plant, and equipment. Okay, and this standard, can you move to the next slide?
Yeah.
And okay, this standard does not cover the biological assets, and then assets held for sales, and then leases, investment properties. Normally these standards are not covered by this IAS 16. Yeah, can you move to the next slide? Okay, as per IAS 16, when we will initially record the property, plant, and equipment, normally IAS 16 define two criteria. First is it is probable that economic benefits associated with the assets will flow to the entity, and the other, the cost of asset can be reliably measured. When it will be probable that future economic benefits associated with the company will flow to the entity, normally future economic benefit will flow to the entity is achieved when the risk and rewards for the asset have been passed to the entity. Normally, the transfer of risk and reward is assumed to occur when an unconditionally and irrevocable contract is in place. In practice, if we will see, normally transfer of risk and reward happen when the asset is delivered. So we can say contractual commitment for the acquisition of PP or disclosed, but the asset is not recognized until the transfer of risk and reward has been occurred. So other thing is cost of asset can be reliably measured. If the cost of the asset can't be reliably measured, then we can't recognize it as PPE. Other thing is how we will make sure that what is included in the cost of the assets. Normally, cost is defined as the amount of the cash or cash equivalent paid, or sometimes we normally give the some other considerations in place of the cash. So we'll consider the fair value of the other considerations given to acquire the asset at the time it is acquired. And other elements that includes in the cost, or if we will break up, it is a purchase price. And in purchase price normally includes actual purchase price plus import duties, non-refundable purchase taxes, and less any trade discounts if there is any. And then directly attributable cost. Directly attributable cost are the costs which are necessary to bring the assets to the locations and condition necessary for it to be capable of operating in the manner intended by the management. The third thing is cost of dismantling and removing the assets and restoring the assets. Normally, when we initially recognize a plant of assets. Not so at the initial stage, we have an agreement for the dismantling and removing of the property, plant, equipment at the end of its useful life. So we have to include in the cost initial estimates of the cost of dismantling and removing the items and restoring the sites on which it is located. Normally, these obligations is incurred either when the item is acquired or as a consequence of having used of item during a period of purposes. And four items that we can include in the cost of element is the borrowing cost. Another examples of directly attributable cost are employee benefits. If we'll see under the asset that asset is being constructed, then the cost of the site preparations and initial deliveries and these things can be included in the cost of assets. Then the next slide is cost of self-constructed assets. Normally, cost of the self-constructed asset is being measured in the same way as the cost of an acquired asset is measured. Okay. Then what will be included in the elements of subsequent cost? Additional once we have is my voice video audible?
Yeah, we can hear you, Vikas. Yeah.
Yeah.
So far there is no question, so you can proceed. Yeah.
Yeah. Okay. Then subsequent costs are normally additional costs incurred after the asset becomes operational and that meet the capitalization criteria, and then capital replacement and renewal of components and major inspection costs. Okay, can we move to the next slide?
Yeah, so I'll encourage the participants
yeah.
to make this interactive session rather listening. So if they have any question, they can let us know. We can in between can answer the questions as well. Yep. Yes, Vikas.
Yeah. Next is asset exchange transactions. Sometimes we don't acquire assets in consideration of cash as other considerations. So normally we exchange the assets. How we will measure that how we will measure the assets that we exchange? First, we'll consider that whether the transaction has commercial substance. Commercial substance is normally when there is a proper sale and purchase, then we'll consider it as a commercial substance. If there is any commercial substance, if there is no commercial substance, we will record the asset at the carrying value of the asset given, and if we'll give any cash, then we also consider that the cash in the carrying value. If there is commercial substance, then we'll consider the fair value of the asset is asset given acquired is reliably measurable or not. Normally, fair value of the asset acquired is available in the market. Okay, and if market fair value of the asset acquired is easily available, then asset recorded at fair value of the asset required acquired will be recorded as the cost of the asset exchange. Otherwise, uh, fair value. Otherwise, we will consider it as asset recorded at fair value of the asset given plus minus cash. Can we move to the next slide? If anyone has any question, they can ask. No. Okay. IAS next slide is measurement subsequent to initial recognition. As per IAS 16, there are two models for the measurement of property, plant, and equipment. First is cost model, and other is revaluation model. Normally, what factors we will consider in the revaluations of the model? First, we will consider if we are choosing the revaluation model, so we will make sure that the model is not applying to a specific asset. It will apply to the whole class of the assets. Otherwise, we can't say that okay, one item of the property, plant, equipment is being applied under the cost model and other is being applied under the revaluation model. And other thing is change in policy. If we are moving from cost model to revaluation model, so it should be considered as a change in policy and it should be reflected as retrospectively. Can we move next?
Yes, meanwhile, I mean, if we can elaborate to the members, I mean, can we use this valuation model, for example, in US KSA or not? Or
yeah. Regarding this revaluation model, previously it was not allowed for listed companies in KSA. Okay, other than listed companies with CMA, they were using the revaluation model, but on January 2022, 2022, CMA has allowed a listed company to choose the revaluation model. Okay, but revaluation model is only used for investment properties. That is normally called a fair valuation model. And even if we see for property, plant, and equipment, revaluation model is not being used.
so basically, for listed companies, still they cannot use.
They can't use revaluation models. They can use only cost model.
Okay,
so for property, plant, and equipment.
Okay, so maybe the practical reason would be like the limited number of valuers available in KSA. So that's why maybe CMA is not aligned.
One factor is this one. Other is that there are huge variations in the valuation of the property due to this reason. But most probably they will allow it since 2023 or more over. But there are only rumors. No concrete news is there.
Okay, so we have short name HP here. He raised his hand, so I'm allowing him to talk.
Yeah.
HP, you can talk.
Hi. How are you? This is Stephanie speaking.
Yeah. How are you?
Fine. How are you, gentlemen? Nice to hear you. I'm very proud about this. Is a short event for this. I think that is in Saudi Arabia revaluation. It is if you're going to use, you have to use valuation from the independent office who is licensed by Saudi Arabia to revaluation for land or other property. You cannot, you cannot do in-house. Should be by a certificate from independent company.
Yeah, if we say that normally what standards say, if we have in-house valuer that is recognized by the valuation authority, then you can use it. But normally companies don't have their in-house valuer that is independent from the company. So due to this reason, normally company goes for the independent valuer.
Yeah, you should go for the dependent variable. You
Yeah,
are right.
yeah,
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 that is things now we are using here in Saudi Arabia because
yeah,
already
yeah.
Yeah,
In
just go
Saudi
ahead.
Arabia,
Yeah,
only for other than listed companies, we can use revaluation model, but for listed companies, CMA doesn't allow revaluation model.
yeah, you are right. But in Saudi, starting for the limited liabilities company, I think that is from 2021 because
No, no,
2022 is still they are not closed.
no, no, no.
I think
Actually,
that is
if we'll see CMA, if we'll see the, let me recall what is the regulation or what is the Board of Commission regulation that they passed. They
Yeah, actually,
resolution date is 15
CMA basically stopped it, stopped for listed companies only. But I think they have not basically, said anything about unlisted companies. So
Yeah,
they could have used, but on top of that, I think I can say the uh, the revaluation model we can use for investment properties so far, and
yeah, you are
practically,
right. You
yeah,
are
yeah,
right. You are right. I
practically, I
agreed
think
with
we
you.
have a very limited number of valuer in KSA. So might be this is the reason that's why uh, authorities are not allowing the companies to use revaluation for PPE basically.
Yeah,
yeah,
that is you are. I agreed with you. Thank you.
yeah. For actually, investment property doesn't fall in the ambit of PPE IS 16. So that's why we were saying that it is not being applied on listed companies here in KSA revaluation model. Even for if we see for investment property, they have certain conditions. Based on that, they can choose a fair value model. Like main important is it should be approved from the B of directors. Policy should be approved. Then investment property should be valued by at least two valuers. Then
Yeah, yeah,
then based out of that they can choose a lower one. Even they say that they can choose lower one, not the higher one. So there are certain other conditions based on that they can use the fair value model. Okay, we can move to the next.
Yeah.
Yeah.
thank you.
Thank you. Thank you.
Next is under cost model. How first of all depreciation. Uh, Depreciation this thing. Salman, can we move to the cost model carrying amount slide? We will cover this in later.
Okay.
Next.
Okay. This is
Yeah, this one. Under cost model, if we'll see depreciate hello. Yeah,
okay. You proceed. I'll manage Vikas.
okay. Uh, Normally we'll see in this screen, you'll see under cost model, depreciable cost is being amortized or depreciated over the useful life. But on the other side, in the revaluation model, a revalued amount is being depreciated over the remaining useful life of the asset. Okay, and revaluation surplus is normally recognized in the property plant and in the retained earning, and then based on the then in consistency with the pattern of the useful life of the asset, it is being amortized to the directly retained earning. Can you move to the next slide?
Okay. So I'm moving maybe to the previous slide.
No, next.
Okay.
Yeah. Then how will we determine the carrying amount of the asset under the cost model? It is basically cost, then if there is any accumulated depreciation and if there is any accumulated impairment. So this will be the depreciable amount basically, or carrying amount we can say at the end of the year end. Then next is the revaluation model carrying amount.
So, so Vikas, should we add here um, the concept of depreciable amount?
Yeah, it is next. It's next to this one. If we will go to the depreciable amount slide, it will be more easy, I think. Basically, depreciation, it is the systematic allocation of depreciable amount over the useful life of the asset. Normally, specific thing that we will consider while calculating the pattern or pattern of the allocation of depreciable amount. Normally, method of depreciation, it should reflect the pattern of economic benefit to be obtained. Okay, other thing is each component be treated as separate component for depreciation purpose, like land and building, because they have different useful lives and their patterns of fundings are different. So we'll use a different pattern. Then it is irrelevant totally whether the asset is used or not when it is available for use. Once the asset is available for use, we will start to charge the depreciation. Okay, and then exceptions are investment properties that is being recorded at fair value. Then assets with indefinite life, we will not charge any depreciation for assets having indefinite life. Then assets whose individual value is more than or equal to the carrying value. Okay, how we will determine the, okay, then there is a residual value. Residual value is the basically estimated amount normally the company would obtain when the asset will be disposed of, and that cost will definitely be considered after deducting the estimated cost of disposal. So major thing that we'll keep in mind for calculating the residual value is that current conditions of the asset should be considered. Okay, then depreciable amount is the cost of assets minus if there is any residual value that will be considered as a depreciable amount. And that if then next is a depreciation method. Normally depreciation method in KSA we will see it is a straight line method. Diminishing method. Diminishing method. Straight line method is basically a commonly used method in KSA, and it is under this method, depreciation is calculated as cost less estimated residual value if there is any divided by the useful life or the percentage of depreciation. Okay, next slide.
Okay, so next one, which slide? Useful life?
Determination of useful life. Yeah, it is totally a matter of professional judgment. What will be the useful life of the assets? Useful life, there might useful life, it can be more than the economical life or economical life of the asset. Now we'll make someone might ask us or might ask question, what is the difference between the useful life and economical life? A useful life is basically the total period under which an asset's useful life starts from the basic. Useful life is defined as a period over which an asset is expected to be available for use by the company. Okay, but the economical life is the total life that the asset has. And next is period over, and can we move to the next? It is basically determination of useful life. Move to the next slide.
Okay, so I think we basically skipped a few slides. Can we go back?
Yeah, revaluation model. Next slide. Yeah, next slide.
Okay, so till now, I think we should ask some questions. I think someone has question, Yusuf. Yusuf, if you can raise your hand, I will allow you to talk. Yusuf? Yep. Yes, now Yusuf, you can talk. Yes,
Yusuf, are you here?
You have to unmute yourself as well. Okay, meanwhile, we have a question from Fahad. Fahad is saying, if an asset is fully depreciated, its residual value will consider as other income or not?
No, its residual value will be considered as other income when the asset will be disposed of. Otherwise, it will not be considered as other income.
So basically, we cannot depreciate more than the depreciable
Yeah.
amount of an asset.
Yeah, normally if we'll see the previous slide, I have mentioned that there is exceptions of depreciation when we'll not charge the depreciation.
Mhm.
Out of that, one was that assets whose residual value is more than or equal to the carrying value. So we will stop to charge depreciation.
Okay. So basically, let's say if we do not have residual value, so we are depreciating 100% value of the property, plant, and equipment. So
Yeah.
it's, I mean, simple logic for the people to understand is we cannot depreciate more than the cost.
Yeah, more than the carrying amount. If more than the cost, we can say.
Okay. So we have one more question from Yusuf. That is,
Yeah, this 17 is speaking again.
Yeah.
Yeah, this is a depreciation. That's what is the difference between the rate of depreciation between zakah and standard rate of useful life or economic life? Actually, in Saudi, they are using useful life. But
Yeah.
if you use more than the rate of zakah, I think that is they are going to do some adjustment again for zakah. Do you have any idea about that?
Clear voice is not.
Do you have any
Can you repeat
idea?
it?
Do you have any idea? I say, did you hear me now?
Yeah. Your voice is audible.
I said for you, the depreciation actually for useful life, they're using basis of standard, and that is estimation for the asset life. But in the CAI standard in Saudi Arabia, they're having, I think that is different rate or same rate. Just I want to know if you have any idea about that, because if you use more rate, then the CAI, they are going to be adjust the same the tax. What they are done in the tax, also they are done in the zakat. Do you have any idea about that rule of?
Yeah. Actually, what happened in ZCA, and normally ZCA are considering the a slab of rates or a slab of rate for depreciation based on the entire market, regardless of the what is the nature of each asset. But if we'll go on the company level, normally at company level, we are estimating the useful life or depreciation percentage. Basically, difference in useful life and depreciation percentage is basically statistical method only. Otherwise, estimations of useful life, that is purely judgment. Okay. If we'll see at the company level, so we are considering the present conditions of the assets at the individual asset, at the level of individual asset, but ZCA is considering at the industry level. So that is the difference. But if when we are calculating the taxable amount under ZCA, so because depreciation that we are charging under IAS 16, we will reverse it and then we will charge the depreciation as per ZCA, and that will be considered a deductible expense.
Okay.
Yeah, is it clear?
Yeah. Okay, if I add here Vikas, in ZCA, are they using diminishing balance method? Diminishing balance method, actually they are applying percentage. That percentage is on WDV or at cost, basically.
Yeah, ZCA they are using WDV, but industry wise, if you see, they are charging straight line method. Most of the companies, what I have seen here is they are using the straight line basis method.
So basically, if we use basically ZCA calculation for the sake of taxable income or zakat, so it seems like the depreciation will remain perpetual because of WDV. WDV will remain. There will be some WDV every year.
Definitely there will be. Yeah, actually, if you see, that WDV will be only for the tax purposes. But what carrying amount we have in our books, that will consider the actual carrying amount of the assets.
Okay, so we have a next question from Yusuf. He's
Yeah.
asking, do we have to capitalize pre-operating cost? For example, the company has built a manufacturing plant which was ready for production and manufacturing on 1st April 2022, but
Yeah.
company has already hired manufacturing manager since 1st January 2022. So basically, plant was in production from 1st April 2022, but manager was hired on 1st Jan 2022. Should we capitalize the cost of this manager from January to March 2022?
When the asset is available for use, then we can charge depreciation. And if we'll see, you are asking about the salaries
Rate of
of the manager.
capitalization, basically. Can we capitalize the operating cost or not?
If we can justify that the salaries of the manager is directly attributable to the manufacturing, then we can capitalize it.
Yeah, but till the date, I think the asset is available for use, but not after that.
Even after that, we can capitalize it, but date of available for use is basically we determine for the charging of the depreciation.
Okay, yani
Okay.
from the day the depreciation will
But
be.
later
Actually,
on,
I'm
if
asking
we'll
on
see,
behalf of.
yeah, if we'll
So-
see a measurement subsequent to initial recognition. So if that cost is for the development purpose or being the nature of the capitalization, then we can charge it. Otherwise, it will consider as a normal servicing cost. So it will be expensive.
Okay, okay. So I think hopefully Yusuf got the answer. The next is we have a 2-3 questions. If the asset is fully depreciated and the asset is still in use, so can we have a revaluation of the assets or let it be at zero?
Actually, it depends totally on the model company is being followed, measurement model. If the company is following the cost model, and it can't be that company, it can't happen that company has some value and its useful life is expired. If company is following the revaluation model, so definitely they can go for the revaluation model. For the revaluation of the property, plant and equipment, and then we'll treat it as per revaluation surplus regulations. Okay, but if we'll see under cost model, and at the end of the life, there will be no residual. There is a residual value only, and the asset is still in use. Okay, then what we can do is we can re-estimate the useful life of the asset. Basically, it is the estimated pattern of the economic benefit that we will obtain from the asset. So we can revise it, but useful life only, not the measurement model.
Okay. We have a 2 more question. The one I think Fahad is saying, actually he was talking about the intention of disposing of the assets and then allocation of residual value. I think you have already answered that. Yes, we can allocate the residual value and basically record as a write-off for income or gain or loss when we are disposing it. The next question, actually, Fahad is asking, I'll reply myself to Fahad. Fahad is asking right of use of asset. What is right of use of asset? We have already, last time we had a webinar on IFRS 16. The video is available on our IFA YouTube channel. If you require presentation, we can share with you. That is a separate topic, and it's a lengthy and a different topic which is falling under IFRS 15. So we can provide you that presentation. One more question we have is, does KSA allow recording goodwill arising from purchase price allocation?
Actually, I didn't hear you. Or can you repeat your question?
Ibrahim is asking, does KSA allow a recording of goodwill arising from purchase price allocation?
Purchase price allocations. Yeah, goodwill is allowed, but that is not on the internally generated assets. That we can say internally generated goodwill is not allowed.
And I think that is a different topic again, not on property,
Yeah.
plant, and equipment. I believe so.
Yeah.
Or maybe Ibrahim can clarify more if I can open up his mic if you want to speak with more specific question. If Ibrahim, you raise your hand, I can open up your mic. Okay, Ibrahim. Yeah, you can talk, Ibrahim, now.
Yeah.
You have to unmute yourself. You have to unmute, Ibrahim.
Hello, Assalamu alaikum warahmatullah.
Well,
Walaikum assalam.
Thank you so much, Salman and Waqas. Actually, we have practically faced one transaction in my company. What
Yeah.
happened? We buy a separate LLC company, and
Okay.
the net worth of that company was 10 million. Okay.
Okay.
So the consideration value was more than the 10 million. I
Okay.
believe, I think we paid 120 million. So this extra 110 million, okay,
Yeah.
there was a debate that shall we record the goodwill or shall we go for
Yeah.
the purchase price allocation purpose for this revaluation from some revaluator.
Yeah. It should be
So
considered goodwill. We have to record it as a goodwill.
we can carry the goodwill
Yeah.
with the delta amount.
Yeah.
Yep.
Having, but conditionally, but subject to condition that we have fulfilled the other requirements of IFRS 5.
Hmm.
Okay.
Okay, thank you.
So basically, Ibrahim, though that topic depends. Maybe it will cover under IS 27 or IFRS 10 or IFRS 5. But yes, goodwill you can generally record. For today's topic, we are not covering that. That is only property, plant, and equipment. So we can also discuss it further when you are available.
Actually, Salman, that was not investment. That was basically we were going to buy a plant.
Okay. Okay.
So that's why we were issuing this. We were facing this issue. So how we will go for this one? Anyways, we have up to now we have recorded that as a goodwill. Let's see what auditors say in the annual audit.
On this topic, we can have a specific discussion later on. You can have my contact numbers and details. Okay.
Okay.
Which are your
Waqas, thank you so much.
topic? Okay. Okay. So we'll move to the next topic. That is the treatment of depreciation under revaluation model.
Yeah.
Yeah. Can we move to the next?
Okay.
Yeah. Basically, under revaluation model, standard allow two methods. One is a gross method and other is a net method. What is the difference between gross and net method? Under gross method, we normally restate the cost and accumulated depreciation of the asset. For example, if at the date of revaluation, asset has a 100 million of carrying value of assets and 80 million of the accumulated depreciation. So we will reverse it and then we will consider as the revaluation, or then we will see what is the difference between the net carrying amount and revalued amount of the asset, and we will record it as revaluation gain. But under that was the net method. But under gross method, we will just record the difference of net carrying amount and the revaluation amount as the revaluation surplus, and then we'll consider it as a revaluation surplus and amortize it over the remaining useful life of the asset. Okay, then next slide is how we'll treat the surplus, and if there is any deficit in the financial statement, how we'll treat it. First of all, if there is any surplus a revaluation surplus, first we will charge it directly to the equity. Okay, and later on, after recording the surplus, if there is any further deficit, or if suppose 1 year first year end is closed and later on there is uh, any impairment loss, so first what we will charge the impairment loss to the surplus that we have in our books. Then remaining, we will, if there is any further impairment amount that we have, we will charge it to directly to the profit and loss account. And at the year end, what we'll do, if there is any surplus amount outstanding, we will amortize it, or transfer on the base of the remaining useful life to the retained earning directly. But on the other side, if there is any deficit and the initial stage, that is the revaluation deficit, so we will charge directly to the revaluation surplus if we have. Otherwise, we'll charge it to the profit and loss. Remaining other condition there would be that if there is any impairment loss that we have already charged to the profit and loss on the assets. So what we will do with that when we have the revaluation surplus? First, we will reverse the debt impairment loss. The remaining amount we will consider as a revaluation surplus. If anyone has any question on this treatment of revaluation, you can ask.
Someone has question, but not on this slide. Let's wait if someone has particular question on this slide. Otherwise, I'll let you know the other question.
Yeah. Then next is decommissioning cost.
Yeah, just a second. The question is, Faisal is asking, using SAP, how can we utilize residual value of an asset if required based on scenario? SAP normally doesn't allow. So, Vikas, if you have any answer, otherwise, because it's SAP related, maybe I can answer.
Yeah, Salman, you can answer on SAP related.
Yeah. So, Faisal, yes, there is an option in SAP where you can basically keep the residual value set aside. We can call it, depreciable amount. So the possibility is there. So there are different options which we can discuss separately. But SAP is allowing to keep the residual value. Any other question? If you have, I can open up your mic. Okay. So the next slide.
Next slide, decommissioning liability or decommissioning cost. In the previous slides, we have mentioned that decommissioning cost is basically included in the initial estimates of the cost of the assets. Basically, decommissioning cost is any obligations that a company has a direct obligation as a direct consequences of acquiring or constructing the property, plant, and equipment that cannot be avoided. So that estimated amount should be recorded as the cost of the assets. Okay. So how we will at the initial stage we will determine that decommissioning cost as per IS 37. Okay. And how we will later on, if there is any change in the decommissioning liability, how we will determine it. Under the cost model, if there is any change in decommissioning liability, a change in decommissioning liability might there will be due it will be due to two reasons. Might be there is a change in discount rate or change in the liability. Whatever is the change under the cost model in the decommissioning liability, we will charge to the assets value. But under the revaluation model, when there is a change in liability, so first if there is any revaluation surplus, first we will charge that change to the OCI. Otherwise, we will treat it as impairment loss and charge to the profit and loss account. Okay. Can we move to the next?
Yeah.
Okay. Next is a derecognition. Normally, derecognition of the asset happen on the on two scenarios. One is when asset is actually disposed of, when company normally estimated that okay, no future benefit is expected to be flow to the entity. So based on these two scenarios, we can de-recognize the assets. On the case of disposal, normally we'll compare the carrying amount with the net proceeds if there is any. So difference will be charged directly to the profit and loss account. And whatever if the asset is disposed of against any considerations other than cash, that considerations will be considered at the fair value. So we'll move to the next presentations and disclosures. As per IAS 16, minimum items that we have to disclose in the financial statement is what is the basis of measurement and recognition that we are presenting the property, plant, equipment in our financial statements. Other is how we will charge the depreciations, and then depreciation rate, and other is a fixed asset schedule. If we are seeing any financial statement, we are presenting it there as a fixed asset schedule. Fixed asset schedule, someone is presenting it as on the net basis, and other are presenting on the gross basis. Gross basis means cost movement is showing separately, and accumulated depreciation movement is showing separately, and then there is a carrying value. The other items that we have to present, if there is any pledge on commitments on these assets, we will also present those items in the financial statements. And other things that we have to disclose is if under the revaluation, specifically under the revaluation model, date of revaluation is when the date of revaluation was happened, and whether the independent valuer was hired or not, and what methods and assumptions were used by the valuer, and extent to which the fair value were determined, and carrying value of each assets of the asset valued, and revaluation surplus moment. And next is topic that we are specifically not covered in this presentation is deferred tax on revaluation surplus and impairment of property, plant, equipment, and changes in existing big machinery, restoration, similar liability. Little bit idea we have given you, but on details we are not covering in this topic. And if someone has any question, he can ask.
Yes, we have a question. How do we calculate revaluation gain or loss?
Yeah. In revaluation is normal. First revaluation, it will be done by the independent revaluer. Okay. At the date of revaluation, we will compare the revalued amount with the carrying amount of the assets. If revalued amount is higher than the carrying amount, then the difference of the carrying amount and revaluation, it will be considered as a revaluation gain. And other thing is that if we have already charged some impairment on these assets, on this revalued assets, so first we will reverse the impairment loss in the profit and loss. Remaining revaluation surplus we will record it in the equity. And on the other side, revaluation surplus, it will be depreciated as per the pattern of the remaining useful life of the asset.
Okay.
Is it clear?
Yeah, I think we don't have further questions so far. So this is basically end of the session so far today. But we are here still for next 5 minutes to question answer session. So Abdul Rauf Usman, I have opened up your mic. You can speak. You have to, yeah, I think you are unmute already. Yes, Abdul Rauf. You have to unmute and you have to speak. Okay. So we had a question basically. Meanwhile, I think if once Abdurrauf is ready, so we can answer. Meanwhile, we had a question that how we can determine the pattern of depreciation. I mean, what standard allow or what standards suggest about it? How
Yeah.
many types of different depreciation we have? Depreciation
Yeah.
method.
Yeah. Depreciation. Okay. Just give me 1 minute. Methods of depreciation. Basically, method depreciation, uh, it is totally estimates that how the pattern of economic benefit will flow to the entity. Okay. If we'll see depreciation method that we normally had, it is first is diminishing method. That is the reducing balance method. Basically, this method is designed to charge higher amount of depreciation in the earlier years of an asset and then later on the reduction in depreciation in the later years. So it is a total management estimates when to use a diminishing methods and when to use a straight line method. For which asset they have to use diminishing and for which they have to consider the straight line method. Straight line other method is straight line. Straight line is the most common used method in practice. It can be easier to access useful life by reference to time period. For example, if we acquire any machinery and like wash refrigerator and other things, we can easily determine for how many years we can use these assets. So we can allocate the depreciable amount based on their pattern of useful life. Other method is sum of units or units of production method. For example, if we'll see the mining industry, unit of production method. In the mining industry, they are total assets useful life is basically determined in the number of units they can extract from the mining. So depreciation should be determined on the basis of the mining that we are extracting from from the uh, from the mining industry. So we can say it depends totally on the economical pattern.
Okay. So we have a next question. What costs or which costs can be capitalized?
Yeah. Which costs cannot be capitalized? Basically, you want to ask.
Yeah. Yeah, you can answer the either option because yep.
Yeah. I'm just answering. Let me take out what are some others. So I'm just normally costs which are not the part of the property plant and equipment. First is cost of opening facility. If we are saying that it's a self-constructed asset, so cost of opening facility, it should not be considered in the cost of the property plant equipment. Then cost of introducing new product and services, it should not be considered. Then the conducting business in locations, it should not be considered. Administrative costs, if there is any, it should not be considered. Then deploying an items, it should not be considered. And then if there is any incidental operational cost, it should not be considered as a part of cost.
Okay. Hopefully, I think the answer is quite clear. The next question is during the useful life of assets, can we change the depreciation method?
Depreciation method, yeah, it is totally management estimate. We can use it, but it should be consistent consistent with the economical pattern of the assets. Because it's totally management estimate, we can change it.
But basically, I mean, if I add on, like, it should not be every year management is molding just because of their own window dressing requirement. They are just doing it. There should be a consistent basis.
It should be consistent.
Yeah.
from year to year and based on the management on the assets economical pattern.
And management also can revaluate, not revaluate, basically can also determine the useful life or review the useful life annually. But normally in the practice we have seen after every third year, the management is, evaluating on the useful life of the assets, so they can adjust it again.
Yeah.
We have, I think, question: which method is better for depreciation?
Actually, it depends totally on the assets pattern. Normally, if we see in industry in KSA, they are using straight line method, but straight line method in practice, it doesn't reflect the true pattern of the benefits of the assets. Hello?
Yeah. So I had a question on WhatsApp someone sent to me. What would be if the useful life is changed?
Yeah.
How we should record the depreciation impact? Is it retrospective or prospective?
No, it is totally change in estimate. So change in estimate as per IAS 8 should be reflected prospectively. If there is change in measurement model, then it should be reflected retrospectively. But change in depreciation method and useful life should be reflected as prospectively.
Okay. So the next question is, can we postpone depreciation in one particular year to get more profit situationally?
No. We can't do this thing. When the asset is available for use, we have to charge the depreciation.
Regardless they are using it or not.
Yeah, regardless of this thing, whether you are using or not.
Basically, it's all about wear and tear.
Yeah, it totally depends on company. I already related to wear and tear. Actually, they just wanted to do the window dressings.
Okay, so one more question: which is not considered as a qualifying asset?
Yeah, for qualifying assets, just 1 minute. First of all, qualifying asset is that necessarily takes a substantial portion of time to get ready for its intended use. Okay. What is not included in the qualifying asset is assets that normally take less than 1 year to be ready for use, that would not be considered as a qualifying asset. Okay. Other thing, asset that is ready for their intended use or sale when acquired, these would not be considered as qualifying asset. So for qualifying asset, condition is that it takes a substantial period of time to get ready for its intended use or sale.
Okay. The next question is, if an asset has fully depreciated, and asset also not exist physically, what are the treatments to get it out from financial?
Asset is fully depreciated and asset does not exist in the books, or physically it doesn't exist.
Yeah.
So first of all, there are control risk. How the asset doesn't exist physically and it is in the books. It is not removed from the books.
So I think it's a practical answer is they should have a disposal form of fully depreciated asset if they are going to remove from the books as well as physically.
Yeah, but practically also there would be board of directors. If it is a material, then board of directors approval will be required.
And on the other hand, normally the companies should not, I believe, a company should not remove the fully depreciated assets from the books. The reason is, let's say in future, if they go for revaluation method and asset is already removed from the book, So then they may not get any benefit of revaluation. So, but standard allows that the fully depreciated assets, they can disclose as well in the financials with the amount.
Yeah. Once the asset is disposed of, so later revaluation should also be reversed or adjusted against the carrying amount of the assets.
The next question is, how often a company can evaluate an asset as per revaluation method and why?
Yeah. First of all, revaluation is normally not required every year, okay, or every reporting period. Okay, it should be performed with sufficient regularity that the carrying amount does not differ materially from its fair value at end of the reporting period. Due to this reason, we normally perform the revaluation of the assets. Okay. Hello, Mehboob.
Okay, I believe so. Mehboob got the answer. Faisal, just wait. I have a few more questions, and I'll unmute you. Fahad is saying, will depreciate.
Sorry, I'm not able to help with this one yet.
So, will depreciate the major spare parts of a machine, which will be used once the old parts are not working. And basically, strategic spare parts. Question is, strategic spare parts should be depreciated or not?
Yeah. If we can separately identify the useful or estimate the useful life of the spare part and it is of the capitalized nature, then we have to consider that asset as a separate assets and we will depreciate it as per its economical benefit.
Along with the useful life of the plant.
Yeah.
It's like a lease or improvement. Okay, maybe it's not a question. Okay, let me unmute Fahad. Unmute Faisal now. Then we have 2-3 more questions. Faisal. Okay. Faisal, now you have.
Hello. Hello, Assalamualaikum.
Welcome.
Is it clear?
Hello.
Voice is clear?
We can hear you properly. Your voice is not clear.
Okay, just 1 minute, please.
Hello, Faisal.
Yes. Now I'm available. I have one question on consistency. If we buy one machine from USA or Japan, or if other side we buy a machine from China, so same machine is capitalized. One machine is capitalized on, for example, 10 years, but with the same specification, if we buy a Chinese made machine, so it would be definitely for 5 years useful life. So how we can maintain the consistency on this? This is one question.
So it's a totally management estimate.
Okay. So for example, sometimes it is audit point, the same items in the fixed asset registers are having different useful lives. So it is just, you mean to say the justification, or we have to keep it same?
So definitely there will be some justification like management if they are saying, okay, for Chinese machines they are buying from the China, it has practically it has less useful life as compared to other machine that you are purchasing from the USA. So it will be a justified thing. So there will be some historical data based on which management is estimating that for Chinese machine, there will be useful life will be 5 years, and for USA based machine, useful life will be 10 years. So it should be based on historical data. And some
so we can do it. We can do it.
You can do it.
Okay. Now the another question is,
Faisal, let me add you some practical answer on that.
Yeah,
if
please.
you allow me, Waqas and Faisal both.
Yes, Salman.
Please.
Basically, normally the auditor would say to you, you cannot have a different useful life for a class of assets. Basically,
Exactly.
here auditor could be contesting with you. So maybe you can make two different classes, like
Yeah.
China machinery, you can make a different class, and American machinery, you can make a different class of assets. But in each class, you can have a similar nature of assets with similar
Mhm.
useful life somehow. Then
Mhm.
that's the way you can manage.
So yes, this involves system modification. Okay, I understood.
Yeah. Yeah.
The another question is, we, for example, we have to install a machinery, a huge machinery, and it requires some civil work. Can that civil work be, normally it is, yes, capitalized, but in future it is, this is part of land, or you can say the construction work on the land, which is just base and equal to the other land. So it can be capitalized, or it should be normal expense. And in future you cannot identify it separately because it is part of land, but you have to dig it, you have to install the machinery in it, underneath and then upward, and then you have to level it. So that civil work includes under the capitalization, or no?
So it should not be considered under the land. There should be some other capital assets. This is
No, no, no,
separate
under,
clause.
not under land, but
Yeah.
the with the machine itself, the
Yeah.
category of the machine.
If it is necessary to bring the machine in the useful for available for use, then it should be capitalized. Like
It
you
should be
said that
capitalized with
without the
the
yeah,
machinery
like
itself.
like you said that uh you can't use a machinery without including these civil expenses, like some
Exactly.
installation expenses are there, some constructions of the
Mhm.
stores and these things are there. So if it is necessary, then you can capitalize it.
We can
Yeah,
capitalize
I
it.
have a practical answer as well again.
Yeah.
Yeah, please.
These base, especially when what we call it foundation definitely can be capitalized along with the useful life of the main plant. Let's say if your
Yes.
Okay.
main plant useful life is 30 years, then the base is also for 30-year minimum.
Mhm.
So that is allowed. And let's say if you have some other works as well,
Mhm.
like piping or other civil works, roads and infrastructures,
Yes.
other than this base, that can have a different useful life. But base is normally having the same as plant has a useful life.
Okay.
Mhm.
Okay.
Because without that base, you cannot install or construct
And
your
it
plant.
has significant cost.
Yeah, definitely.
Mm. Okay.
So,
Okay. Thank you.
are you done, Faisal?
Yeah, I have few questions, but it will take more time, so we'll discuss separately.
Okay,
But for the webinar, it's fine. Thank you.
okay. Thank you. We have a two,
Thank
three
you.
more questions quickly because we have to wrap up after that.
Yeah.
The next question is there any guidance that is required annually? I'm not sure what Mehboob is asking, for which thing he is asking annually. But uh, I don't know what to answer. Even his question is generic.
Next is that what is
Is there any
this?
guidance not required? Okay. Um, Frequently charging in the spare parts. How can determine its cost for capitalizing as per IS 16? It is related to available aviation and oil and field refinery. I mean, basically, they are talking about spare parts.
Yeah.
So,
Yes. Do you have spare parts and normally spare parts and serving equipments are normally treated as inventory. If there are major spare parts and standby equipment, then they should be treated as property plant. If they meet the definitions of PPE.
okay. So the next question is, what is the possible practice for turnaround, shutdown, and replacement of plants, basically?
Yeah. Yeah. Basically, day-to-day services normally include the labors, consumables, and other things that include the replacement cost. And this type of expenditure are basically repair and maintenance expenses.
Mhm. So, what about turnaround or shutdowns?
I didn't get from turnaround what you want to say.
Okay, so I can explain on behalf of you. Basically, for example, in petrochemical, we have mega turnaround after every third year or fifth year, or after every second year, for example. So that is basically to sometime to enhance the quality of the products, or sometime to ensure the reliability of the plant. So in that cases, the industry is using as a practice to capitalize the turnaround cost. Like after every third year, they will go for a detailed inspection and replacement of parts wheresoever are required. So they have many activities inside that. So that turnaround cost, yes, it can be capitalized. I have read the specific guidance somewhere in the standard to capitalize the turnaround cost as well. So any other question so far? I believe so. We had a very effective session today, and Vikas delivered it very well with the detailed understanding of IS 16. I believe so. All the participants would have also, gained some knowledge based on that. And the question answer session was, I can see as compared to our previous webinar, we today, most of the time, had more than even I can say half of the time we spent on the question answer session. That's what we are exactly looking always. That's why we want to make these kind of webinars more interactive by having or by discussing the practical opinions and the I can say the practical requirements. So I'll again thank you, and then thanking you to all the participants who has joined us today, and definitely our special thanks to our speaker, Mr. Vikas, and I can also basically pay regards of IFA team to Vikas to had his precious time today to deliver something to us. Thank you so much, everyone, for joining today. We can conclude this session, and we'll stay in touch again with different webinars on different topics. Thank you. Thank you so much, everyone. Thank you so much, Vikas.
Yeah. Thank you, everyone. Thank you, Salman.
Thank you so much.
Assalamu alaikum.
Assalamu alaikum.